and welcome everyone to Silver Asset of the Day, and today's Q&A as well for the 12th of November, presented by myself, Phil Carr, at the Gold and Silver Club. The first question today is from VJ, and that's with respect to gold at the current levels at $1,450 per ounce, and silver at the moment trading between $16.70 per ounce up towards $16.80 per ounce. The question being, where is the low going to be for gold and silver, and do we see a breakout back towards the recent swing highs, which of course on gold would take the price back towards $1,557 per ounce, and silver it would take the price back towards $19.60 per ounce. So one of the really important ways to track this is to keep a very close eye on the gold to silver ratio. That broke out to 2-month highs over the course of this week. Silver dropped over 7% in the latest week. And if you look at the swing highs from 1960 down to the low of $16.60, we've seen over a $3 move to the downside for silver. So the risk to reward now is very much getting skewed to the upside here, where we're looking for ultimately a seasonal play on the metals, which typically again tend to outperform over January and February and August. These are the very strongest months of the year for the metals. What you want to obviously keep an eye out for right now is whether we're going to put in another low before we then potentially capitulate to the upside. So this all comes then down to risk management and being aware of key events that can be catalysts for the market. So we have a month now until the mid-December FOMC statement, where we want to see whether the Federal Reserve will be cutting interest rates. This week will be very important with the speech of Donald Trump today, also Jerome Powell testifying, and inflation data this week too. So it's whether we're going to see one last big shakeout, whether we're going to tap that magnetic level for silver of coming down to that $16.50 per ounce handle, and potentially on gold, whether we're going to either hold 1450 or get a shakeout lower, back down towards 1425 or 1400. I do believe that if we break as low as 1400 on gold between now and mid-December, the price will not stay at that level for long, and we will set up for a large rally going into January and February, and we will break out of that swing high at $1,550 per ounce. If you consider from the current price with gold right now, which is trading around $1,450, it's a 1,000-point move now back towards the swing highs that we saw over the course of the summer. So again, now the risk reward is more favorable to the upside. We've said this multiple times before, don't FOMO into the metals. If you're patient enough, you always get opportunities to buy on these pullbacks. Don't FOMO in. Don't buy at the highs. We've seen recently, of course, in the lead up to the non-farm payroll, a breakout with gold, which netted us over 720 points. That was right at the beginning of the month. We banked our profits at the upper end of that channel, and this has given us the opportunity now to start building positions at lower prices again here. So you don't want to be buying gold above that 1500 level lately. This is where we saw a lot of traders get trapped in their positions, not only on gold, but also silver as well. Traders getting in too high at $19 or $18.50. At these levels, I do like silver. I like silver at $16.70 or below. I'll be very interested to see if we can capitulate lower over the course of this week, and gold as well. Watch out between 1400 to 1450. This is going to be a very interesting zone over the course of this week as to whether we're going to springboard higher or whether we need to get a final flush out and then a reversal to the upside. This then brings me over to Cindy's question, and Cindy's been doing very well on the breakouts on gold over the summer, but now we've seen the correction. She's wondering how to trade gold now, given that it started to sell off and we've seen a move back towards that 1450 level. So essentially it's exactly what I mentioned there. Watch out for those key news items this week. Donald Trump speaking, which is due out later on today. We want to get an update with respect to the trade talks. Jerome Powell speaking on Wednesday, and we want to watch out for narratives regarding future interest rate cuts in December. That's what we're going to look for, future monetary policy guidance off the back of that speech, and inflation data this week as well. From a cycle point of view, usually mid-month in November, there is this metals correction. This has been the same year after year after year if you go back on gold and silver, but typically we then break out again higher at the end of the month. But watch out again going into December, because that week of the FOMC statement, the UK election, the European Central Bank, in mid-December, again, can really provide some explosive moves, which sets up for some great trade opportunities into January and February as well. So really going back to Cindy's question, your key really is a research-driven approach to the markets. Don't be trading outdated technical strategies which no longer work in these market conditions. You need an edge. You need to be aware of the seasonality, the cycles, the money flow in the markets, what retail traders are doing, what the hedge funds and money managers are doing, where the key levels reside in the market. All of this will build up your edge and you'll be much better informed to take solid trading decisions. So with that, that has been Silver Asset of the Day. Thank you again for all of your questions, and of course I wish you good trading.